Welcome to today's ad-free live stream. Now, if you're here for the first time or if you're new here, my name is Tyler and I'm here to help you navigate the wild world of day trading futures. So during these live streams, here's what you can expect. I'm going to be breaking down live price action. I'm going to be sharing my daily bias and real-time trades to give you a front row seat to all the action. No fluff, no rants, just the good stuff. Now, there may be a couple good rants in there, but you know what I'm saying. Now, if you're watching the stream after the fact, you can jump to the key moments here using the chapter markers below. You'll find the places that I took all the trades along with all the detailed explanations so you can learn exactly what I was thinking and why. And now, for those of you that are ready to take the next step in your trading to the next level, I got a special discount for all of my community here at DTJ. You can use the code DTJ to get 80% off of your next Apex evaluation to start your own funded journey with Apex. You can find all the links and the codes down in the description of this video. And with that, let's get started. I want to give a shout out to today's music. It is by Yoni Charis, I believe. I think that's how you pronounce his name. Let's see. Yoni Charis. He is a YouTuber, live streamer, content music creator, and he puts music out on YouTube, and it has a more of a calm sound to it. He's a believer, and I want to feature his music on this channel, and I do have the permission by giving him credit. So I'm really excited about that. So let's go ahead and get started. We got about 9 minutes before the market open. Let's start open with a prayer here. Lord, I just want to thank you for the opportunity we have to make money here as day traders today. Thank you, Father. I want to thank you that you've given us the ability to produce wealth, and we will produce wealth today. Today we receive what you have for us. We don't take from the market, we receive, because all provision comes from you, and we trust your provision. And so I just want to come against any doubt, selfish ambition, greed, lies of the enemy, whispers that says you can't do this because you can. With time, with focus, intentionality, you can do this. So Father, we honor you in Jesus' name. Amen. All right, that is the morning spiel. We are done with all of that stuff. Actually, there's one more thing I want to note. I'm liking price action today, by the way. It looks significantly better. I mean, look at these up and down movements right here. Today could be a beautiful, beautiful day for trading. I'm really excited about that. Let's see what happens here today. Good morning, Deborah, Ted, Alkai. Glad to have you guys here this morning. We're going to get rocking and rolling. Now, Apex just came out with a little bit of a statement I'm just going to share. Let me jump to my big monitor. Okay, and drag this over here. This was a message from Apex, from Daryl Martin. I don't know who Daryl Martin is. I'm assuming he's some dude at Apex, the main man, the honcho, the macho man, maybe. But he basically just wanted to address some of the rumors, some of the attacks, the conspiracy theories. And what he was saying in this message, basically he says, back in July, I made a video message to you in the Apex community. I outlined some of the growth pains Apex had been through and what we were doing to improve things. He said he ended the video saying that these may seem like just words to you, which was fine. He said he's going to show us through his actions. Apex has kept their word, followed through with their promises, and was transparent about the issues and told you they were working to fix them. And he says we have fixed them. A lot of rumors, fears, false information, conspiracy theories have been spreading. You can now see that these were all untrue, empty words from haters and competitors that could not keep up. Our word was true. We were working on it just like we told you, and now in action you can see it all for yourself. Now, I guess you can't really see it all for yourself if you aren't getting any payouts, because that is where the biggest issue has been, was in the payouts. And it seems like they've addressed that. Well, at least from my experience in my last payout here just last week, I wasn't asked for a video. I wasn't asked for anything, and it seemed fine. Well, they may still ask for a video later on. I don't know. We'll see what happens. But I just wanted to share that with you guys. As far as what the market is looking at, like, guys, today, as I said before, is looking really nice. I took a long before stream. You can see where I may have taken a trade. Can you guess where I took the trade? Can you see it? If you can't, I'm sorry. I'll teach you how to see it because these are amazing. This was an inversion model. The close above this, we went long, boom, 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 right here. Nice little trade. I didn't copy it. It was just on a funded account, so nothing major. But I was happy. So here's the thing. If we go to a daily time frame here, we're jumping out to the daily here. Okay? Take a look at this. Hang on, I forgot I need to do this. If you look at the daily chart, I want you to take a note of what you are seeing here. Okay. On the daily chart, we have no fair value gaps except for the one we filled and then the one way down here. Now, we could turn and head this direction. Is that likely though? Is that likely before we grab liquidity? This is the price moves because of two things, imbalances and liquidity. What did we do down here? We filled an imbalance. Then what are we doing now? Well, we could have just ran this liquidity. But based on yesterday or the previous day on Friday and then on Monday, I doubt it that this was just our target. I'm now looking at this monthly and weekly target. Now, we did not close above this weekly wick, this weekly consequent encroachment of the weekly wick, which I have laid out here. This is going to be a key factor. Either we close above it and don't hit the high, and then we will hit the high eventually, relatively soon after that, or we hit it in the same day as we move above the consequent encroachment of that wick, which is sitting over here on the weekly chart. So here's our monthly. Okay. This is our draw on liquidity. This is what I'm looking at as my potential target. And then if we go through this potentially here, I don't know if it's one or both, getting a move up to here still would be fantastic. Okay. That is kind of the higher time frame target. Now, if we drop down to the 15-minute, we are sitting inside a 15-minute SIBI right there. A close above this in 1 minute and 30 seconds will be supportive to a move higher. We'll see where that closes. I have our previous day high, our previous day low. I have our midnight open, and then we will also be dropping our 9:30 opening price here in a minute, as well as the opening range gap, which I'm assuming is going to be down here. So we're going to have a large opening range gap to the downside. The only reason I think we could go lower is this looks beautiful for a market maker sell model. So if we see the structure for a move lower, I will play lower. No doubt in my mind. I think we may reach back up to the previous day high right here without potentially breaking this high today. And we could see a market maker model, sell model, running down to these relatively equal lows down here. This is what a higher time frame, I think we're bullish. Shorter, I think we could be bearish. I like this. I like this a lot. So we have to read what price action is saying. And we need to see, based on price action, where we want to go. Here's 14 seconds. We're going to drop down to the 1 minute. And let's mark our opening price here. Oh, we don't want that. We want our opening price sitting right here. Now, if we run down to regular trading hours, you're going to see this pretty large gap. It's about 70 handles. So sometimes when you get a very large gap, we won't fill it right away. We'll fill it partially, making people think that we're running to fill it, and then it will move the other direction. Right now, we're just pumping higher. All right, so there's the opening range gap that we have sitting right there. And did we close above the 15-minute on the 15-minute chart? We did not. We did not close. So this could all just be a wick here at the end of 15 minutes. We have this minor buy-side liquidity. And let's jump to the news here. Tuesday, we got 10 a.m. consumer confidence. Woo! I don't know if I'm going to take any trades before then, folks. I'm just saying, consumer confidence will give a little bit of a bump, and it could be in a holding pattern till then. We just need to see what price wants to do. But I really like the idea of a market maker sell model. It looks really nice for that. And we have a draw lower here as well. Buy side liquidity, not ran. Now it doesn't have to run it if we want to continue moving lower. Let's move this out of the way. It closed. We got minor buy side there. We just made equal lows right here. I like the idea of it hitting this level and then continuing lower. Okay, 50% has been hit of this opening range gap. I'm only looking for a retracement here. I would love a retracement into here. It's our first fair value gap as well. And I would like to see resistance. I'd like to see resistance there. Now, if we blow through this and we close above it, we will run for this buy side. We got minor and another minor right there. But I really would like us to reach into this. It just sucks we got consumer confidence at 10. Take note on how this candle closes here. Are we just pushing lower and then wicking back up? Which is what we've seen the past few days. We've seen this the past few days as far as the signature and price goes. Yeah, so you see how it's holding? I take a deep breath and relax, because this means we're holding. I mean, it could run, but when I see these wicks, I don't want to be a part of that. That tells me, okay, whoo, I don't have to really, you know, be worried about what's going to happen here. Charles, good morning, my friend. How you doing? Oh, holy cow. I didn't realize I got that monitor there. Okay, let's do that. Looks way better. Hey, random question. If you and futures market are CST, why do you always mention times in EST? Just curious. Dunsworth, fantastic question. Because the algorithm is based off of New York time. It is based off New York time. So midnight open, New York time. 9:30 open, New York time. You could use your 8:30. If you're in Central time, you could use your 8:30, but it's just easier to always do 9:30, because if you also watch ICT or anybody else that has learned from ICT, which I have, everything is in New York time, EST time. I'm doing great. I passed an eval yesterday. It was a horrible price action. I'm so glad I stopped when I did. There was one move lower relatively soon after I got off that I'm like, I could do an eval on this. Did an eval and passed it. So I didn't do anything else yesterday for the most part, watching this fair value gap. And then what else? We had nice weather yesterday. Ran some errands. Today all the kids are in school. Now what I'm not interested, I'm honestly, it's disappointing with news right here. If there's aggression, I'll take it. But you got to remember, we got to wait for the close, because you got all of this stuff right here. Honestly, we could see something like this. Boom, 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 boom. That's what I think we could potentially see. Grabbing, making it, filling this, running liquidity, running back the other direction. I mean, I do like the 5 minute. We have a 5-minute change in state of delivery right here. I mean, this is beautiful for a short. It really is. I think what I'm going to do here, folks, I'm going to take a off-screen trade, not take one on screen here. Because I have news going on, I'm not advocating anybody to take trades before news, but I am taking a trade off screen right now. I'm sure you can guess what it is. Okay, that will be good for that. I took this breaker and inversion, or this fair value gap rejection right here, down to this low. Off screen. Why off screen? Because we still have news at 10:30 or at here in 20 minutes, and honestly, that's it. I've been telling you guys that you need to wait. I'm not going to take any trades on screen if I'm telling people to wait. But personal accounts are a little bit different. You can do whatever you want on a personal account, right? I know I'm held to a little bit of a higher standard because people are watching. I understand that. So I want to be as transparent as possible. I think we see lower prices right here. I'm out of a trade. I'm not in anything. Deborah, 3 to 5. 3 to 5 contracts are what I use when I'm doing evals right now. I'm not going to recommend you do that though, Deborah. Only do that if you're very confident at reading price action. I've gotten really good. I think in the last 10 evals I've done, I've lost 2 of them. I think I've only lost 2 or something like that. I know. I understand that frustration. Here's you need to experience it for yourself, okay? So yeah, I understand. So here's what I'm going to say. You need to experience it for yourself, but here's what is a high probability of happening, okay? You're going to take bigger contract size, you're going to see some success, and then you're going to convince yourself that this is the way you need to go, and then what you'll end up happening is you'll end up blowing more of your accounts than you would by staying small and keeping to your strategy and focusing on learning instead of passing. Whenever I've gotten out of this mindset of learning and I moved it to I have to make money, I failed way more. Now there's a point that switches, but even though it switches, I'm very, very conscious of when I'm sizing higher, because inside something just happens. Something happens and I can't really describe it. You'll experience it, and when you experience it, you'll know what I'm referring to. I mean, anybody on here, if you're in the chat and you're listening, you've sized up and you're taking trades, comment in the comments that you've experienced it. I mean, you feel different when you size up. And even though you might think you're under control, subconsciously, your decision making is affected. It just is. Until you can get to the point where you're consistent enough to be able to identify when you can identify in the moment how you're feeling and what's going on here. And some people are better at that than others. I apparently wasn't very good at that. You may be better. So you can also take an account and try it and test it. I mean, the nice thing about evals is you're risking $30. So you can say, all right, I'm going to take this one account. I'm not doing any others. And I'm going to size up and see how well I do. Am I following my rules? Do I find myself taking gambling style trades? Am I over trading? Am I revenge trading? You need to identify those things in the moment while you're taking those larger sized positions. Then see how you feel. Stop and then journal. How was sizing up today? And you're journaling, writing down. I use my computer. I write everything out on my computer. And note how you're feeling. Okay? If you're finding yourself not able to control yourself, or subconsciously you're doing things that you know you shouldn't have been doing after the fact, then it's not time yet. You need to wait. You have to wait. There's a switch that will happen, and when it happens, you're going to be super excited because you just know something's different. I remember over and over and over in my trading that I would talk to my brother. My brother is also, I got my brother into trading as well, and I would tell him, I'm like, bro, it's almost there. I can feel it. It's like, it's almost there. And it's just like, it's almost there. It's almost there. And every time you're taking a step a little bit closer, a little bit closer. And then I don't know what happened. Something clicked and it was just different. I don't even know when it happened. It was different. And it will happen. But submit to the time. Submit to the process that you're in. I mean, people go to a 4-year college to make $40,000 a year or less and not even use their degree. We are taking a course that in a year to 2 years, you will be making more money than anything else you've ever done. If you submit to the process and you submit to the education, you don't get complacent. One of the mistakes I made early on is I thought I was learning when I would just get in front of my charts and try to trade. That wasn't learning. That was actually, I should have viewed it as this. When I sit down in front of the charts, when the bell goes off and it's live trading, I need to view those trades, me taking trades, as executing on what I learned. Executing on what I've learned, what I've studied, what I've back tested. And all of that happens after the market's closed, before the market's open, late at night, downtime during the day, not looking at current price action. Current price action is only teaching you how to read order flow, which is very important, but you need to go through post-price action to identify the setups over and over and over, see the patterns, see where you potentially could have made a trade and where you shouldn't have made a trade, journaling that, and then getting so familiar with that process that when you're in front of the charts, you can identify it more. When I'm in front of the charts now, I'm seeing 2 to 3 different potential outcomes of a trade. And I'm having to go through and decide which one is more probable, which one do I like, what's my bias, what's the higher time frame draw. Okay, this one, let's do that one. That is all that's going through my head because I've already been able to identify my setups. I can see the setups in front of me. I missed some, obviously. Everybody, oh, there it is. I think we are going to go lower, folks. I am waiting till 10. Don't get sucked in. Don't get sucked in. Only reason I took this is because we went into this fair value gap and rejected. And I took that. That just to me was too obvious. I know this sucks. It sucked when the candle was way down here. Does it suck anymore? This is why we wait. That is what you just saw there. You cannot learn in post-price action. What you just experienced in that one candle is something you cannot learn post-price action. We saw this wick way lower and we're like, holy cow, we're missing this. And what happens? It goes all the way back up. And what is the common factor? What is the common factor? It is news at 10 o'clock. This, we can now say, all right, you know what? Maybe I do feel confident about waiting till after 10 o'clock because, man, look at this gnarly candle that showed me a big black candle running down here and then it retraced all in 30 seconds. And now we potentially go in the other direction. So this kind of candle, what you just saw here is how you build confidence in the charts. Beautiful. I mean, ugly, but beautiful. And if it did ran this low, this is the opportunity right here to go long to this buy side. We're gonna watch this price right here. We still got 9 minutes though. Charles, 100%. Size up when you're consistently profitable. It's hard. I mean, anybody here is going to say that's hard because define consistently profitable is going to be different for every person. One person say, I'm green on the week. I'm going to size up next week. I'm green on the month. I'm going to size up this month now. Right? There's different factors. Mine has been more fluid. I've changed because I thought I was ready. I did it. I had losses and then I went back down to smaller size. Got the consistency, built my confidence back up, and then I went to larger size. At one point, I was doing only 1 micro. I mean, I think you've seen me do 1 micro on my charts before. Right now, any trade I take on this chart right here will be with 1 mini. I've debated going back and forth between 10 micros and 1 mini. It's harder when I'm trying to show the trades and different trades and I want to watch my charts and I want to watch the mini chart. So I feel drawn to executing on this chart because this is the chart I'm looking at. And it's easier for making content and creating YouTube shorts and all that. So I'm just like, there's more advantageous for me just doing 1 mini. Get 20 handles, call it a day, make a short out of it, you know? Now, here's a scenario that I've seen happen before. We're making this trend lower, right? We're making this trend lower. At 10 o'clock, we could either just drop or we could run all this low resistance liquidity to this buy side and the previous day high. This previous day high was ran in pre-market over here, but I typically like to wait till it runs it in the New York session. So I'm still looking at this as a potential draw on liquidity, and I'm not ruling it out. I do, and am looking at this structure of this price action, and it looks pregnant for a move lower at the same time. So I'm waiting for 10 o'clock to tell me what direction it wants to go. And this is a key fair value gap here. And then the only other thing that I would be looking at on a downside move is a rejection of this level. If we drop from here, I will miss the trade. I need it to come back up to this level and show me what it wants to do here. Because nothing else makes sense in my mind on a move lower because I don't want to go short here. I want to go short up here. if I'm going to go long, I'll go long up here to these equal highs. So this fair value gap in my mind, in my book, is a very significant fair value gap. It's also the first fair value gap. So that's how I'm viewing that. There is something that I'm trying to flesh out. I'm journaling right now. I'm trying to get my words right because it's a very theological concept, a biblical concept that's really theological. It's really heady here wise that I'm trying to flesh out to get the right words so that when I communicate it, it's understandable in regards to when I take trades and when I'm not taking trades, when I'm revenge trading or over trading. I feel like I got some insight on that from the Lord here recently, and I want to articulate it. I don't have the language yet, so I'm excited on sharing some of that stuff. And I'll probably be sharing it with you guys first before I make any type of separate video because I just want to flesh it out and be able to talk it out loud, but I'm not quite ready yet. I'm really excited about it. I think it's very impactful, specifically for those who actually call themselves Christians and believe that they're saved or transformed and made new in Christ. There's some concepts that I really believe will help people trade. Not just trade, but live their life. More importantly, live their life free from sin, free from struggle. But 3 minutes. We kind of just been chit-chatting until we actually get this 10 o'clock candle. I mean, look at that. Look at the 5-minute chart here. Just wick down, closed candles. This is, I mean, it's looking nice for a drop here. What does a 15-minute look like? The 15-minute, I'm going to mark this out. This is a 15-minute fair value gap low. If we close below that in the next minute, that will probably drop the rest of the way. We got we got 1 more minute. So let me jump to the 15-minute here. This is what I have it anchored on right now. This 15-minute fair value gap's high and low. If we close inside this, we need to watch the candles. If we close below this, we'll still watch the candles, but the bodies are telling me the direction. The bodies of this closed inside this fair value gap, meaning it turned directions. Now, are we going to close below this or are we going to close within it? That's going to give me potential direction. It doesn't mean take a short right away because that would be a mistake. It could still wick all the way up here and then close lower. But we just need to see what happens with price here in the next 29 seconds. And even based on what I'm seeing right here, it could be going. It would be a mistake to try to take this and hope that the news candle just wicks lower. That would be a mistake. It could work, but it's a mistake. We're not gamblers. All right, there's the close below. And this is what I said. I said we don't want to do. It could work. We're not gamblers. This is the news candle. This is the close below. This is what we said could happen. I'm just not willing to risk multiple accounts to try to get one win when I know I can get another setup. Okay? That was, I expected that to happen, but we're still not going to take that. Midnight price here. Give me a retracement. Come on. It may not give us a retracement. Those are the lows, equal lows right there. That's yesterday's, that's the new week opening gap right there. And the equal lows is right here at the low of the new week opening gap. All right, let's see what kind of rejection we got. The problem with taking a short after we retrace a little bit, we have such a large candle, it could retrace a lot more. So we need more structure for us to be able to take a short. Because this could be our, I don't think this is our draw on liquidity. I don't think that. I think it's down here, but we need to find out where do we want to get in. Is it here? It could be, but you have the risk of it taking you into drawdown higher. This is very hard to do, and after a very large candle, I would rather wait for a retracement because after very large candles, most retailers saying, oh, it's dropping, I want to get in short. And why is it not going anywhere? It's holding here. Now it could drop right here, but it's even this wick is like saying get in short, we're going, and then it turns around and it moves higher. We got to wait for a retracement that is appropriate, and it may not give us one. One thing that I'm learning and continue to learn from ICT is remembering that there's going to be another trade. There will be another trade that we'll be able to take. Don't worry, something else will show up. All right, there's the equal lows. Two standard deviations for the previous day low is way down here. We're almost there. This drop is insane. You know what's crazy? Is that I called it right here. I took the trade. I just took my 20 handles, or I took whatever. I took my 10 handles, 15 handles, and got out. What was that? I don't even know how many I got there. No, it was more like 15, 20 handles. That was the setup right there. It's just before news. And there's the drop. A crazy drop indeed, Deborah. Crazy indeed. Let's see. Where is it stopping? Let's go higher time frame. All right, so we have a 15-minute candle and we have a wick in here. Let me mark that. Here is the consequent encroachment of the 15-minute wick. We'll mark this out here. Okay, so price, we wanted to see it stay above this wick if we're going to see if it wants to have a retracement. If we find ourselves pushing below this wick, we're probably going to run that, and that's going to be our sign that we need to find an entry. But right now we've stopped above it. Let's see where our opening price was, 930. And to 955. All right, there's our opening range projections. We got all the way to 4 standard deviations. 1.5. Here's 1. That was really nice. Our 1 standard deviation was right at the equal lows, just below the equal lows. For a sustained move higher at end of this week, would like to see 19,842 go first. 19,842. Where did 19,842. So you want to run below the sell side liquidity from Friday. Basically. We got sell side liquidity there. If we go to the 4 hour. Daily. It's also a new week opening gap. Fair. Here, I like this rejection right here. I like that. I like this right here. We came up into this fair value gap. Let's see if this closes here and gives us a fair value gap here. That will be our play to the downside. I'm gonna get rid of these right now. Just let's see if it keeps it here and doesn't close it. We really don't want it to close. Son of a gun. I mean, I'm not going to play off of that tiny fair value gap. That's just too small. It could do that. There's a wick down into it. Now we could push higher right here. I would expect to move higher more than a move lower right at this point, because I'm not taking that. Dunsworth. No, it wasn't Dunn. It was Judas. Judas. If I'm looking at the 4 hour, and I'll just food for thought. Here's your 4 hour. If we are really bullish, ICT talks about this a lot, and this is why I'm only bringing this up, is he would rather see the bottom half of this wick stay open. If we see the bottom half of this wick stay open, He says that is more favorable for a bigger move higher. He does not like to see these levels hit and then gone. He would prefer this. That would be my only thing. So I could see the previous day low hit and find support there to then continue higher. I think that's the scenario that I personally would be interested in. It doesn't take away that this could be a possibility, come down into, this small fair value gap here. But you got to also remember that this wick right here, overlapping with this wick right here, balances out all of this. This is a balanced price range. It doesn't need to come down there. Just some thoughts there. Hit the midnight open, inverse that fair value gap to move lower. I don't know if I would take it all the way to this low because I'd be watching the consequent encroachment of this wick. But I will say this, Judas, that is 100%, you're on the right track on identifying a move lower to go higher. That is exactly what we need to be looking for. And us trying to figure out where that level is just comes through experience. I'm not saying I'm right because obviously it hasn't done it. Time will tell. But you're asking, we are asking the right questions to help us predict future price action. And that's exactly what we need to do to become profitable traders. So either way, whether you're wrong, I'm right, I'm wrong, you're right, the point is we're asking the right questions, which makes a profitable trader. All right, so here we just wicked into, no, we just made equals. All right, there's a wick into this large fair value gap right here. Let's see if it wants to give us a rejection here. We also have midnight open right there. I like that. You see that rejection? That's an institutional order flow entry drill. If you don't believe me, as far as this wick, the high of this wick is 47.50. The high of this candle is 47.75. By one tick, it wicked into that. Now, I'm not saying that, I'm just saying if this wants to move lower, this is called an institutional order flow entry drill. This would be confirmed by closing below this, and that would also give us the confidence to take this for a short. But it needs to do it in this candle or the next candle. If it doesn't, then am I really looking at this as an institutional order flow entry drill? Probably not. So I'm seeing a signature in price. Now I'm looking for the confirmation of that. We're waiting for this close. We're not taking it prematurely. Now, because we don't have a ton of structure, I might sell this prematurely if I get 10, 15, 20 handles. We'll see. How am I not? It did not copy that. That's frustrating. Okay, we're looking for this swing low. We're watching this swing low right here. We want this to be taken. See, right, once we hit this low, we move our stop to break even. We're finding resistance right there at that equal low. If we close above this, that's when we close the trade. Now, I'm not going to let this get too crazy against me. And this trade did not get copied on all my accounts, which is really disappointing. We'll see if it, what happens here. Not sure why I didn't. We don't. We want this to be a big candle closing lower. Okay, it did wick lower here. That's okay. I don't want much more time spent in here. I don't like it coming back up in here again, guys. It needs to fill this area and it needs to run. Coming back up here multiple times, to me, is not a good thing. Currently, this is my target. I might drag this lower. See how that closed? I'm not liking that. All right, the moment we close, get below this candle right here, I'm going to move my stop to break even. This is going to be important. We should not be coming back up here. There's my break below. I'm moving my stop below break even. So now this is a break even trade. If it comes back against me, I'm protected. And that's really what I want to make sure. This is our point we really want to see hit. And I think I'm going to move it down here. Because if it goes against me right here, I'm okay. I have a break even here. This is the level we've been watching. We wanted to run. That was our original stop, our break even point. But see how it's retracing on us? There's our stop. This is why we have that. That's good risk management right there. Now let's see if this actually runs against us. I kind of want it to run against us for the mere fact that I got stopped out based on the rules of moving my stop to break even when we ran this low because of how much time we were spending in here. If we went below here, we have no reason to come back up here. I could have sold and got about 15 handles, but I didn't. That's okay. Wasn't really too bummed because for whatever reason it didn't get copied on all my accounts. I'm not sure why. Oh, I know why. I was on the wrong contract. There we go. What is reply Kanto playing up? I don't know what that is. It's respecting this. The body's respecting it. I just don't, I didn't like, yeah. I'm okay with the decision. So I realized what I did. On my copier, I selected the wrong month. I selected September instead of December, and so it didn't copy. Because I took the trade on December contracts, but my copier was set up on September contracts. So that was my fault. This is set up here for later, guys. If we don't run it right now, we could get a deeper retracement, which honestly, I think we should get a deeper retracement before we move. We really don't have to. We could just go. That's I mean, this looks beautiful for a continued drop lower. It really does. Hey, DDT. Good morning. Come join us. We're just watching price run without us. Do not see this as the draw on liquidity and go short right here. Yes, it could work, but I've done that so many times. It'll just retrace against you. Don't do it. Or do it and find out. It was a nice trade if I was still in it, Deborah. I mean, it worked out. It worked out beautifully. We had the right setup. It's just a matter of it doing what I wanted it to do. But the key thing is, did you recognize it? If you recognized it, take a snapshot of it, call this the inversion fair value gap, right? Do all the stuff you're supposed to do, and then annotate the charts on what you're seeing. Here's our break even. If I was to keep with the my initial rules, this would have been the break even point right here. Break even. So that means my stop would have not been triggered, and it would only been triggered right here. And then at that point, I wouldn't have been stopped out and I would have been able to take this trade. So lesson for me is don't move your stop up before you're supposed to. That's the lesson. If this is aggressive right here, this is an inversion fair value gap to the upside. It's a A- trade because we didn't hit sell side liquidity here. But we could have a big retracement here. So if it closes here, break evens here, targets these equal highs or these equal highs. Let's see if it wants to grow aggressively. It only works with aggressive candles. If it starts doing this, then we're not taking it, or I'm not taking it. It needs to be based on an aggressive momentum candle. Now, this is not momentum. This is actually a rejection. We have a breaker right here that could move lower to this low. That's honestly what that could be. I think I like that better, to be honest. I'm not going to take it. I feel the emotion right now, wanting to go short right here. This is the breaker. The model's there. Fair value gap, the model's there. I'm just feeling emotional, so it's wiser for me to stay out. Give me another rejection. Give me a fair value gap or give me a candle up to here and another rejection, and I might consider it. I just like this low resistance liquidity too. It's 50-50 in my book right now, folks. It's 50-50. I want a deeper retracement before we continue, but this looks really nice for a move lower, and this looks really nice for a move higher. And I can justify both. I wish this breaker was higher up. Because of how low this breaker is, it makes it less appealing to me because we are in discount. But if the momentum's to the downside, this will work out. I'm going to take it. I'm keeping a tight stop loss here. I'm not going to let that come back up and hit me. I move my stop to break even. I want this to run if it's going to do so. Gonna take profit. I'm 50-50 on that, if I'm honest, guys. I was feeling the emotion. And I'm probably gonna pay for it. I'll have to journal this. I wanted the profit more than I wanted to get stopped back at break even. That is what I'm feeling right now. I wanted to be green instead of another break even trade. That was the mistake on my part. I mean, it was a risk-free trade. A risk-free trade, and I didn't keep it. This is that 15-minute wick. The CEO of the 15 minutes. See how it's respecting this? It came down below it, but immediately went back above it. We're staying above it as well. I like my trading style too, Judas. Sometimes I just make emotional decisions. That would have been a break-even trade. This candle right here would have wicked me back at break-even. So I would have got stopped in. I got stopped. I would have gotten stopped out. Break-even. That makes me feel good if we just drop right here. The other thing about identifying multiple options is when it works out one way or the other, you can journal what your options were, what happened with price, and what you see to help support and give you that confidence the next time. So right now, if that closes above, it gives me more confidence about running this. I would not take it on when it closes above. I want to see a retracement and then move higher. We should just run lower. Ugh, man. You guys are seeing me going back and forth. See you, Joe. Thanks for being here, man. We are also higher time frame context wise. Oh, it's only Tuesday though. No, we're gonna wait on that. Wait on that assessment. Got equal highs right here. Equal highs here. Yeah, this looks too nice to not be ran. Kind of, at this point, we're waiting for the 10:45 macro, the 11 a.m. macro. That's gonna, what I like here is that we ran these equal lows and we're consolidating. That typically means we're getting long or short orders. I don't like how we're hanging a lot of time in here. I think the liquidity is down here. We could get a deeper retracement here. I need more. We've been respecting this a ton. I wouldn't want to have gotten short here and have to hold through all this, so I'm okay. Probability of it running here is relatively high. Let's see how these candles close. How are you guys doing so far on your end? You guys getting good? Any good wins? We being patient, waiting for that next setup. What did we take? We took 2 trades, right? One stopped out for break even up here. Took a short in small profit. So 1 for 1 with a break even trade. All right, mister. $500 on your 100. What do you got to get on your 100K? I don't. Is that a prop firm challenge, or is that just like I made $500 towards my $100,000 goal? And $500 of a $100,000 goal would be still 0.5%, which is a good trading day. If you're wondering like, wow, it's running without me, where's your entry? Besides your first breaker entry. That's great. Nice job, mister. Congrats. Wick below this, closing up here. We still have 30 seconds left. Here's our daily low that we're looking for. I'm not sure we want to hit the monthly. I mean, higher time frame, I feel like we do. Lower time frame. We just moved so aggressively right here that this could also be a market maker. Sell model. I would enter right there. Normally in the past, I'd enter right there. Let's see what happens. It'd say, oh, this is going to run. Let's see what happens. Fictitious entry right here. It would have worked. Got out right there. Got about, what, 8 handles? I've done that. It works. It's like a 50-50 odds. It's just I've gotten too many burns on those types of trades. Well, I don't want to take them anymore. If you guys do use Apex, or you know what's funny? I requested to get an affiliation with an affiliate link for my funded futures, and they rejected me. I don't think there's much. I really don't have anything negative to say about my funded futures, in regards to the experience with them. Sign up was easy. I like their platform in regards to keeping track. They give you graphs and stuff that it looks sleek. It looks nice. I don't like the monthly membership cost. That's probably my only thing I don't like, no matter if you get funded or not. Right now, I have a bunch of funded accounts. All my funded accounts are lifetime accounts. So if I don't blow the account, I don't pay anything else for them. So that means you could literally do a single micro contract to build them up over time and learn and not have to worry about paying a monthly cost of $80 a month. That's the only thing between my funded futures and Apex that's different, and it kind of sways my vote to choosing Apex, is the monthly membership cost. They don't give you a lifetime option. So you have, how many, can I ask how many do you have with my funded futures, mister? I'm watching this level right here. So yeah, so your monthly cost is $80 a month. Whether you pass it or fail it. Give me a second here, folks. My wife's calling. Hello? Yes. Yes, I am. I probably have about another 30 minutes. Okay. All right, bye-bye. Yeah, I think that's the only thing for me, is I know that I can pass an eval account in 30 days. I pass it in a day typically. So that's a $30 fee, $33 fee, and then I have a lifetime one-time fee of $85. So if I keep that my account, if you have a my funded account for 2 months, it is better for you to get a Apex account. If you can be sure you're not going to blow it, it is better for you to have an Apex account, simply just from the monthly cost perspective. There's no other added value other than the visuals that my funded futures got, and they're great. They're nice. I really like the way it looks. But that's about it, I think. Nothing to say. I think it's honestly at this point it's just preference and you kind of maneuvering. What do I expect to keep these more than 2 months? It's not $80. It's $40. It's $40. So 1, 2, 3 months. It need to be 3 months, not 2 months. Okay, we are looking for a long move here. We're looking to see where this closes. This is a big fair value gap. This is 20 handles. So we're watching to see what happens here. I have this breaker here. This is a breaker here as well. Let's see. I don't want this to run without me. We want to see it close. I want to see a retracement here. I want the retracement. I want the retracement before it goes. I want the retracement. Give it to me. Come on, give me some more. All right, we'll take it here. Let's see what happens. We're targeting these equal highs right here. Did we? Oh, son of a gun. That was a bad judgment call on my part, folks. I missed this this line right here. Son of a gun. Let's see what happens. I need to figure out if I'm going to get out of this or not. See how we wick that high? I don't like that. I don't like it at all. I want to see it run in my direction right now. I don't like this. Is gonna reject and get a big push lower. That's what I'm expecting. Let's see what happens here. I'm not gonna let it go below that because it has a high probability of doing so. Yeah, that was my fault. Poor entry. I didn't see this wick right here, or I would not have taken that. Because we grabbed that, I want a deeper retracement. Yeah, if it just got me on that and then it moves higher, I'm going to be annoyed. Give me a bigger wick in here. Honestly, I like this 5-minute change in state of delivery right here. Let's be patient. New 5-minute candle. We could get either a pop here or a retracement. I'm hoping for the retracement, not the pop. Equal highs. I played that wrong, folks. I'm disappointed in myself. I missed this wick right here. I would have waited for it to come back down into here before I would have taken it. It's okay. Playing off of this inversion fair value gap. If we close below it, I'll be closing the position and calling it a day on that one. I'm looking for it to push towards the midnight opening price. We wicked above that high. I might take, okay, there we go. Profit grabbed. All right, there we go. Turned into a win, made it back there, folks, plus some. There we go. That could have been a much bigger win. But I'm grateful. Let's see, that was we got in somewhere around here. $20 handles. 20 handle win on that. I'm okay with it. Yeah, 20 handles because I remember what my balance was. But that's beautiful for today, folks. You get a 20 handle win on a micro, on a mini account. On 5, you copied on 5 accounts. It's $2,000. Ted, I would be calling it. I'm going to be calling it a day as well, folks. I think, honestly, this is probably the beginning of the move. This is a mistake I've always made. I take my long, and I'm leaving all of the profit up to 930. And I think that's where we're going to be headed. So, the only thing I might consider doing is taking a micro long if we get down to this 5 minute. Let me check the 15 minute. Check the hourly. Ugh. Yeah, this is bullish. The hourly is really bullish. I doubt we're going to be able to get back down here. But if we somehow get down to this inversion fair value gap that broke us higher, I might look at this as another long opportunity. I am not Deborah. I sold at 20 handles at the midnight open. That was my target. And you can see since we hit the midnight open, look at the bodies respecting it. Wick, touch, wick, wick. Let's see where it closes. I mean, it absolutely could still go higher, but that was my target. This was the manipulation stage below midnight open. And I think we run for these highs. It's very rare where we take sell side and buy side. So the odds are against me. I mean, you just look at the daily chart. Look how many times both the previous day low and the previous day high are ran. And you'll see 1 out of 10, 1 out of 20. It's like a 5% chance that it happens. What I consider a breaker? Yes. But you need to expect it to run lower. I like that the breaker is from the new week opening gap high to roughly the new week opening gap low. So it could go anywhere within that range. So yes, I think you could. Yeah, it would look something. Say it wants to come up to this low here. Retrace back down to the new week opening gap. Then move higher. That's an option. And this could be this could all be done in the afternoon. It all could be done in the morning. We may not retrace and we just straight shot like this. That's less probable, but I see that happen quite often when people think that it's bearish and we get a big move like this. The next move in the opposite direction is just as aggressive. Yes, we would be looking at some market maker buy model. You absolutely could see that. So here's our consolidation. Here's our distribution. Here is our smart money reversal right here. So this would be our first move back down, would be our first stage accumulation. Then when we get up here, more than likely we'll get a second area of reaccumulation and then we'll go through it. So you could probably plan on 2, but sometimes it doesn't give it to us at all. Sometimes it doesn't at all. If the way you would play this is, if you're done for today, you walk away, and then around 1:30 you come back at the charts and you see where it is. If this hasn't been grabbed yet and we're still sitting right here and we haven't come all the way back down here, then we're preparing for a push through this. Okay? If we come back down and we run this low again, forget everything we just said, right? That's just not part of the cards anymore. If we are here, we just do a bunch of stuff right around here in this range, from this high to this relatively low, we're in this dealing range, then yeah, we could still run this high. These are the trades I need to get better at. I mean, I can't tell you how many times I've seen it. We wick below the previous day low, and then we just explode. It's almost like, let's just take the entry here, folks. Take it on a 1-minute change in state of delivery. Get your entry right here, and that sucker just takes off. I need to get better at that. I'm going to continue to do back testing, but when we do hit these lows, we get some type of retracement. Now, what is higher probable? What has a higher probability? First off, what I said is it's very low probability for this high to be ran when this low has been ran. You look at the daily charts, you can see the details. What's a higher probability is that the low that is ran after the retracement, price will come back and run it again and move lower. We just got to see what's in the cards. See what price wants to do. And based on how aggressive this sucker's looking. Jeez. We sold at midnight open, 250. It gave us another 25 handles. So that would have been a 50 handle move if you would have held it. These are the plays. This, I can guarantee you that you will see ICT or any other ICT traders do a better job at holding this. Some of them, I mean, my model and my strategy is to get 10 to 20 handles. So I will be changing that to get bigger moves. But man, I'm happy with my 20 handles copied on several different accounts. That's just, I can provide for my family very well doing that. So we're going to call it a day here, folks. Thanks for being here. We'll be back again tomorrow morning. Use the code DTJ for the best and most updated discounts on Apex. If you want to use Apex, you're welcome to use my funded futures. I'm not pushing someone one way or the other. But God bless you. Thanks for being here, guys. We'll see you all tomorrow.